A trading account is prepared to determine gross profit or gross loss. And so we are building from the knowledge we have that profit is equal to selling price minus cost price. But here we are going to replace the terms. The profit will be gross profit or gross loss. And these profits are known to be the profit we make from buying and selling, right? So the name gross profit or gross loss means the profit or loss you get from buying and selling of goods. In place of the selling price, we are saying we'll refer to the net sales. And we have just agreed that net sales is your total sales minus your return inward. And then the cost of sales, first and foremost, is given by the cost of goods sold plus trading expenses. And we are building on to know what cost of goods sold means to be the cost of goods available for sale minus closing stock. And then the cost of goods available is opening stock plus net purchases. And when we talk of net purchases, we are looking at your total purchases, i.e. your credit purchases and cash purchases. You less any return outwards and you add carriage inwards. So now that we are familiar with this concept, and please note them, you can be asked to explain cost of goods sold or cost of goods available for sale. If you are confused with one of them, please let me know so that I go over it again. Is there a particular one you want me to go over? The cost of goods sold, or maybe the cost of goods available, or maybe the net purchases? Please let me know. Okay, your silence means that you are all okay. However, I'll still go over. So when you talk of the cost of, let me start from the net purchases. Net purchases. So if you're a trader and say you go to Makola Market to purchase, maybe you are buying and selling shoes. So you go to Makola to purchase shoes from your suppliers. Then we say when you pick that total cost of purchases, less any amount or cost of shoes that you returned back to the suppliers. So maybe you went to buy 100 shoes, 10 of them were faulty, so you sent them back. So in your calculation, your total sales 100, you less the 10 you returned back to the suppliers. That's why we are less in return outwards. And then you add the cost of carrying the goods from the market, that's Makola Market, to your shop. Maybe your shop is at Kaswa. So you have to take a car, put in the shoes and carry it to your shop. That is the carriage inwards cost. So carriage inwards is the cost of transporting goods purchased. Okay. So that gives you your net purchases. That net purchase, we are saying, if you already had some of the shoes in your shop from the previous year, that is the opening stock. When you add those from the previous year to what you have bought or what you have purchased from Makola Market within that period, then the total becomes the cost of goods available for sale. Okay. And then when you have the available, at the end of the period, you less the goods that you didn't sell. That's the closing stock. So closing stock is sometimes referred to as the unsold stock, the stock you haven't sold. When you do that, you get your cost of goods sold. You add on trading expense, you get your cost of sales. So dear professors, this is what is arranged in a certain format as follows. So let's consider the format of the trading account. Format of the trading account. And we are going to do the format using the idea we have gotten from, first of all, it is your net sales minus cost of sales. So in any case, you always have to determine your net sales first. The net sales should always be first in the format. However, you know, accounting, we always pride in writing the title of account and statement. So the title is trading account for the year ended. And mostly the year ends 31st or 30th, or if it is February 28th. So let's use 31st, maybe December 2006. So you always write your title like that. Then you underline it neatly. After that, you have to normally show, you have to give some 3 columns, and those columns are going to be the currency columns, or where you put your amount. So let me use dollars here. So you give 3 columns for the okay. Let me put my cursor here. Good. So as you have your 3 columns for the amount, the first thing, like we have all agreed on, is getting your net sales. And we know to get your net sales, you begin with the sales, and then you less return inwards. So normally what you do is you would put the sales under the second amount column. So here, because it's a format, we'll use small x to represent the money. And then you less the returning was like this. So the figure you get is what we know as the net sales. So the net sales, please put it at the last column or the third column. Okay. So you put the net sales at the last column. So in terms of the format, this is what you do to get your net sales. And please, this one, you have to remember it all. You have to do some babadie, as in chew and pour in small, but with time, as you practice, it will always be in your brains, ready to be produced. So this is how you first get your net sales. Your sales less return inward. I want to believe there are no challenges with it. So after that, let's go to the equation that we established. We have gotten the net sales. What is left is the cost of sales, right? So we go to find the cost of sales. So under your net sales, you write cost of sales. And you know, for the cost of sales, you have to go through some hurdles, right? Easy ones, of course. Okay. Please, if you are confused at a point, let me know, okay? So that I take my time and I explain these things very well for you. So for our cost of sales, the first thing you look at is your opening stock. That's the stock you are starting the year with. It's always important to bring it. If you are doing business and you have some of the goods already with you for that year, you have to consider it first. Then you add your net purchases. But we all know that to get the net purchases, we have to less return out to us and add carriage inwards. So we do those adjustments here. You put the figure at the first column, okay? And then you add the carriage inwards. Okay, and then you less the return outwards. Less the return outwards. Let me reduce the font size so that it will be on the same page. I don't want it to overlap. Please, if you can see it, you let me know. Okay. So you all agree with me that when you add the carriage inwards and less the return outwards, you get the net purchases. So the net purchases is what you add. So look at where I'm going to put the net purchases. I'm going to put it under the opening stock. Okay. So that when I add it, I get the total cost of goods available for sale. And building or looking at the build up with it, okay, this is your net purchases, right? When you add it to the opening stock, you get the cost of goods available for sale. So in the format, you put your opening stock down first, and then you go and look for your net purchases. You add it, and then you get the cost of goods, cost of goods available for sale. That is how you have to understand the format. Okay. Even though it's good to always do some kind of root learning, as in chewing and pouring, you also need to understand. So the understanding is that put your opening stock first. The stock you are bringing from the previous year, you put it down first. You go and look for the net purchases, okay? That's your purchases less return outwards, add carriage inwards. And then when you add those two figures, you get the cost of goods available for you to sell within that year. Then you less closing stock. Okay, we are lessing the closing stock because we want to determine the total cost of goods that we have actually sold within that year. So when you less the closing stock, you now get the cost of goods sold. So you see that we are now almost getting closer to our cost of sales, right? If you have the cost of goods sold, you add trading expenses, and then you get your cost of cost of sales, right? So when you less your closing stock, you get the cost of goods sold. Then you add trading expenses. Dear professors, the typical trading expense you see at your level is wages. Wages. Please pay attention to that. Wages. If salaries is attached, you don't bring it. We are only looking for only wages. So in the question, when you see wages and salaries, that is not what we are referring to. We want to see only wages. Okay. You add it on, and then you get your cost of sale. There are some questions they can give you different trading expenses which are not wages, right? Okay, so the cost of sales will now come under the net sales at the third column. So you put it at the third column. So now the formula we deduced, net sales minus what? Cost of sales. And the difference will give you either gross profit or gross loss. And that will end your trading account. I want to believe you pictured the format very well, right? And you just need to understand, okay? But when you are learning, you can take your time and go through them step after step. So you can first look at how you get your net sales, right? Which is your total sales less return inwards. When you get that, you now go to your cost of sales, which begins with the opening stock first. Then you go and look for your net purchases, okay? You add on to get the cost of goods available. You less the closing stock to get the cost of goods sold. You add trading expenses. Then you get your cost of sales. Match it with the net sales to get your gross profit or gross loss. Please, at this point, I'll pause for any questions or comments before we move on. Ask me questions. Prof. Alexia, are you okay with us? Are my professors okay? Prof. Alexia is typing in the chat. Yes, please. Okay, that's good. Prof. Sandra, I hope you're also okay.
Yes, please.
Okay. So please, we need to remember this format, okay? So we have to take our time and go through it. However, let's pick the first illustration and see how we can prepare our trading accounts. Please, for those of you who are copying, or if you want to write something down, I can leave it on the screen for you. I think no, I'll share this thing right after the class. I'll share it with you on the pages. So let's move on. So let's look at illustration 1. The following relates to Prof. Sandalex. So that's Sandalex Company Limited or Sandalex Trading Limited. For the year ended for the year ended 31st December 2023. So sales, we have 100,000. Sorry. Purchases, we have, let me change the sales to 400. Purchases, we have 200,000. We have stock at 1st January 2023, 150,000. We have carriage inwards 20,000. We have return outwards 10,000. We have return inwards 50,000. We have wages 80,000. Then we have stock at 31st 2023. $90,000. So you are required to prepare a trading account for the year ended 31st December 2023. Okay, so this is a simple example for us to go through. So normally this is how they give you the questions. They give you a trial balance, and all of us as of now know the trial balance with these items, and then you pick them and put them in the format to prepare your trading account and your profit and loss account and balance sheet. Okay, so shall we begin? For it to be faster, let me see if I can copy this one. Then we just populate, or let's start afresh everything. So please, when you are given the question, you always need to write the name of the business. The name of the business is very important. So this is in the books of Sandalex or Sandalex, in the books of Sandalex. We are preparing the trading account for the year ended 31st December 2020. Neatly underlined. Then you bring your currency, and the currency in the question is dollars. So one here, and then finally one. So dear professors, we are doing it together. Even though we just learned the format, I want to believe you can remember it. So what's the first thing we bring in? The trading account? Prof. Alex, yeah, okay. I think she will type in the chat. So let me pick on Prof. Sandra. Prof. Sandra, what will be the first item?
Sales.
Thank you very much. So you put in your sales, you go to the question and pick your sales figure, which we have 400,000. Now, always be careful, okay? There are some questions, you may not have some of the items in there. Example, if the question is one that you don't have return invoice, okay, like this one, you don't have return invoice, then you have to skip this step of lessen the return invoice. Hence, your sales figure will go straight under the third column as your net sales. Okay. So if you are solving a question and the sales figure has no return invoice to less, you put it straight under the third column. But if there is return invoice, you put the figure at the middle column and then you less the return invoice. So let's go to the question and pick the return invoice, which is 50,000. So when you less the 50,000 from the 400,000, you would arrive at your net sales figure of 350,000. Okay, let me close up my figures a bit. Okay, so we now have our net sales. Then the next thing is to go and look for the cost of sales. Cost of sales. Which we are all aware, we need to start with the opening stock. So let's go to the question and please, Prof. Frank, what is our opening stock?
Say 150,000.
Okay, 150,000. So the date would really help you to know which one is the opening and which one is the closing. So your opening stock are mostly at the beginning of the period, right? So always use those clues to get them. So 150,000. Then we go to add purchases, right? But our purchases is one that we need to adjust carriage invoice and return out. So we'll put it at the first column. And the purchases figure given in this question is 200,000. So this 200,000 we less the return outwards, and the question had some carriage inwards as well, so we add the carriage inwards. So let's pick those two figures. Return outwards is 10,000, carriage inwards is 20,000. So return outwards 10, carriage inwards is 20. Let's do the maths to get the net purchases. The net purchases would be 20,000 minus 10, that's 190 plus 210,000. So you now have your net purchases adding on to the opening stock, right? And that's going to give us our cost. That's going to give us our cost of goods available for sale. And that is going to be 360,000. And from this, we less the closing stock. Let's check the closing stock, which we have 90,000 here. 90,000. So when you less closing stock, you get a cost of goods sold. So 360 minus 90, that should be 270,000. Okay, so we have our cost of goods sold. The last thing left is to add the trading expense, and I told you the simple and common one you get is wages. Okay, so that is 80,000. So we add wages. So when you add the wages to the cost of goods sold, our cost of sales, which will now move under the last column or the third column, which is our net sales figure. Fortunately or unfortunately, it is also 350,000. So the business didn't make any profit or loss. So in this case, how do you write it? So you write your gross profit, okay, and there will be nothing there. So you can put dash there or 0000, whichever way you want to present it. Let me arrange the figures because of the, okay. Okay, so we had a 0 gross profit. So that will be dash, and that ends your trading account. So very simple. Very, very simple. Any question up to this point? Any question? I don't think so. So, dear professors, this is your trading account. We'll pick on the profit and loss account, but let me seek your permission, or let me seek questions from you so far. If there are questions, please ask me. I'm stopping the recording so you can talk.